Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. Another interesting week. Early in the week, we saw some big push with lots of positives happening. And I think the cattle market really taking advantage to the drop we saw in the corn market. In midweek, it's kind of leveled itself out. We're going to dive into what's been happening within that trade, what we're seeing on the cash. And is it that time of year where we normally get to see that feel and move forward towards some selling opportunities? We're going to get all the details today with Brad Kooima. Brad, of course, with Kooima Kooima Varilek in Sioux Center, Iowa. And Brad, let's start out Monday, Tuesday trade. It was nice to see a lot of green on the screen, knowing obviously that there was a struggle on the grain side.
We for sure a great start to the week, and frankly, what's been really a good run for almost 3 weeks here on both cattle and feeder cattle. And I guess I don't think I hope no one is feeling like they need to crawl out on the window ledge here just because we had a little bit of a down day today either. No, it's been a really, really good week, and we expired the Feb cattle, and for a change, the Feb cattle this year really, really performed as compared to last year, and then of course the year before, where it was right on the front line of the COVID problem. So it's nice to see the big rally, which I think is seasonally correct. And we may talk a little bit more about those seasonals here in a little bit. I thought the market today, I think it's good to reference the corn, Susan. The corn basically had a 50-cent break and without even a look over its shoulder. And of course, that certainly supported the feeder cattle trade. Cash feeders have been, stronger almost every day the last little while. But the break in the corn certainly was a big prop underneath this feeder cattle futures up until today, where the corn finally caught in the front, at least the front end of the market closed a little bit higher.
So as you take a look at this market trade, how is the cash moving? Are you happy with what we're at, considering this is March and typically we get kind of that seasonal happening?
Well, yes. Short answer, you can't. 165 is what we sold cattle for here yesterday and today. The highest. Well, let's see. Yeah, I would say I think it's probably the highest price for cash cattle this time of year. 2014, of course, we got in the low 70s, but that was in October. Big price, of course, anybody that's a feeder like I am, would want to quickly add, big price with not a lot of big profits because of a very, very tough winter and an extremely high cost of gain, partly because of the cost of feed and partly, of course, because of the very difficult growing conditions that we've had across the north. But, I've been encouraged that you've got a system that seems to be working. The cutout's gone higher. Packers got margin. We're selling cattle on a timely basis. Hopefully we're making a little bit of money. I think we're getting along good. Your reference to it's March 1 now, right? And if I actually the last 2 days pulled out my seasonal book, which I had basically been, using to balance the crooked legs on the table because the seasonals hadn't worked
Right.
basically since the Holcomb fire. And then we had the whole supply chain get all mucked up with COVID. And, it feels like maybe we're about back to more normal. And so you're also seeing some more seasonally reliable moves in the market. So I think maybe because of that. So, I think March 4 is the first time you see a seasonal sell signal on cattle to sell June cattle. Again, be careful with the seasonals. They're not an end all, but this is that time of year where you look for, a high price. And certainly this would fit that definition, right?
Do you have some feels that maybe the cattle is overbought at this point?
Well, yes, it was. And finally today to have a little bit of a down day, I thought was probably actually healthy. And really, there was a little bit of fun selling when we took out that first minor support level around 164.65. And then I thought, well, maybe they're going to get after it a little bit. But it didn't. And we closed 60 some cents off of the lows. I thought the market handled itself pretty well. I was encouraged that the forward spreads worked again, even on a down day. So I think that breaks will be well supported because I think the speculative interest in the market is that they do want to, continue to fight on the long side of the deal. So I was thinking maybe we could get a 2 or 3 day correction, but maybe it won't. The market acts pretty salty, I think.
Will cash be able to move above futures at some point?
That is actually the guess of what I expect maybe is going to happen next. And I'm saying that because not necessarily because that's what usually happens, because it isn't. So seasonally, the April cattle would carry $1 premium and then get even wider during the delivery period, as we get closer to the delivery period. But we've talked about this before, the difficulty in recruiting the long speculator. You got to have somebody that is willing to buy April cattle above 165. Now, I would suggest part of that crowd that'll buy them up there are the crowd that sold them too low. So I mean, there is that the liquidation part of the market. So I wondered there if I don't believe that there's enough cattle in March and April to really break the cash market. They certainly aren't in the north. So if you have this reluctant futures market and grind the cash a little bit higher, I could easily see cash getting above futures, which frankly, I would be very delighted if that would happen, because that's also a very positive deal, right? I mean, it gives you incentive to stay current, holds maybe these replacement feeder cattle a little bit more in line, although that's a challenge because they're really, really high. But yes, I wouldn't be at all surprised that that's the next thing we're going to do here.
And finally, really just hope that this weather holds off. They're talking another storm system moving through. And it's just like we cannot, as cattle producers, there's no break out there for them.
No, and it's if anybody thinks that, okay, it looks like it's all good, I think last week we talked about this. The closeouts that I'm experiencing are as bad or worse, and frankly worse than they had been the whole winter. You're getting cattle that had 90 days without a good day on them. Now it's warmer, and of course now we're going to fight mud, and a lot of it up here in the north because there's so much snow to melt. We had a half-inch of rain here the day before yesterday. Perfect, right? I mean, you couldn't make these outside feed yards look any worse. So yeah, we're bedding them and doing everything we can, but it'll be a little while before this straightens out. I'm afraid we're going to have to rip this whole month off the calendar before it starts to get better again. Hopefully these calves handled it a little better than the bigger cattle they usually do, but it's too early to be able to tell that too.
All right, sounds good. Thanks for joining us this week, Brad.
Of course, thank you.
I always remind folks, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's been this week's Cattle Call on the Rural Radio Network.